All right, so you want to buy a house. So now we got to choose what kind of loan is going to work best for you to get you to your goals. So there's a lot of different acronyms that we throw around. There's VA loans, that stands for Veterans Administration Loans. There's FHA loans, which is the Federal Housing Administration loan. And then there's what's called your conventional loan, which is your standard non-government loan. So first, let's look at that VA. So in order to get a VA loan, you have to have served in active duty for 2 years. There's a few other ways you can earn it, but that's the standard way. So if you haven't served in the military, that one's not for you. But it's one of the greatest loans out there. And if you have eligibility, you need to use it. It's a 0% down loan. It does not charge you monthly mortgage insurance, and the interest rates tend to be better than standard conventional loans. So the only drawback is, like some of these loans, there's an upfront funding fee, which is basically, for your first time use, 2.15% as of this recording. And luckily you don't have to bring that money to closing, but it does get added to your loan. But it's still, I think VA loans are amazing. So let's go to that next one, that Federal Housing Administration loan. This is one of the easiest loans to help you get into a house. So it also has pretty low rates. It only requires you to bring 3.5% of the purchase price as a down payment. So that's relatively low. Plus it has a lot of other good benefits that lets you get in. So the one drawback though is that it also has a funding fee, which is 1.75% as of right now. And so that can be a good amount of money, right? Maybe it's $7,000 or so, and you're not bringing it to closing, but it is part of your debt. So it's real money, right? And a lot of times FHA is the best monthly payment. So if that's what you're going for, unless you have a very, very high credit score, a lot of times the FHA is a great place to start, and then you can refinance, which basically means redo a new loan after a couple of years. So let's look at one more loan type. That's conventional loans. The great thing about a conventional loan is that once you own 20% of your home's value, either by bringing that to the table or after some time, there's no longer any monthly mortgage insurance. So I've used that word before, so let me define it. Mortgage insurance is basically the money the bank requires you to pay them every month so that, because they don't think you have enough skin in the game. They want to make sure that they're protected if you walk away from this house. So conventional loans for a long time are thought of like as the higher standard of loan. You'll probably eventually end up in a conventional loan. We even have some amazing first-time homebuyer conventional loans that only require a 3% down payment now. So there are some stipulations, so definitely talk to your loan officer about that. But this video is just an introduction to the 3 main types of loans that can help you buy a house.